Hello guys, I'm glad to have you on board again today. I'm going to try making a complex exercise, but that is something that I wanted to do for a long time now. Most importantly because I've seen those questions flourishing recently over the web, so I'll try to give it a rational answer coming from a trading perspective. Because that's what most of you guys are actually doing, exposing some capital to a trading scenario. So the big problem I have with that, and the reason why I'm going public with this, is that most of people now are actually not doing such a thing. They're actually gambling or doing whatever that is, substituting a trading strategy to whatever that is, either the so-called fundamental analysis or just pure basic trading your ideas instead of having a trading plan. So all of those things that you should never do in any given case, for the simple reasons that if you trade an idea, these ideas may change over the time, just because sentiment is not a consistent thing in human beings. On the second end is that if you're trading the so-called fundamentals, which I see a lot right now, fundamentals changed a lot, of course, as well, as projects get to mature or just as the rest of the world is so much more complicated than just relying on fundamentals, okay? So this is a constantly evolving stuff, and if you ever intend to do trading anyhow in any way, which means exposing some capital, you first of all are doing trading. So you need to understand that in trading world, there is one and only one language that anyone agrees upon, and it's certainly not fundamentals. It is technical analysis. Every professional trader performs some kind of technical analysis. Of course, everyone has its different version of it. You'll never see two traders with the same strategies. But there is one thing I've learned throughout the ages recently, is that anyhow and anyway, the more I come across another trader, some real trader that I can assess for professional activity, well, we might have different language, we might have different terminologies, we might have different indicators or strategy, but we all see the same thing in the end. That's really staggering. So this is one of many proofs that technical analysis is the standard basis of either trading or investing, because investing is no more than just trading on larger time frames. So you cannot substitute a technical analysis or technical vision and risk limitation perspective of any of your trading or investments, certainly not substituted by just ideas. I'm trading because I think of whatever, or so-called fundamentals. I'm trading because the supply is shrinking or whatever. Bullshit. Okay, so let's give a rational technical analysis to this. Don't copy, of course, like I said. Every trader has its own technical analysis, which means you simply cannot copy mine. Mine is my vision of stuff, is the prism through which I see markets and which I make my personal decisions. But understand that risk management only make its beauty and its magic throughout multiple trades, which means if you intend to follow me on ETH, then you have to follow me everywhere on every one of my trades, and you have to apply my strategy on every one of your trades. It's not ETH dependent. What I'm doing here is things that I would use in any other asset that is, okay? And it only proves itself through a high number of repetitions, which means I am certainly not weather forecaster things. My things do not predict the futures. They have a statistical relevance. If I throw the dices 10 or 100 times, it works. But on a single throw, I don't know anything, okay? So please don't extrapolate my words, but I'm gonna do my technical stuff over ETH to answer that big question that is flourishing everywhere now. Is ETH going to be there 10 years from now? Is ETH going to succeed? Its scalability procedures and all of these things. I'm going to try bringing a rational sense to this. So if the question is ETH still going to be there 10 years from now? Whatever the form it is, ETH 2.0, 3.0, whatever, okay? Is it still going to be a thing 10 years from now? If I have to answer that question, there's only one way I can do it, okay? If ETH as an higher value 10 years from now means it is on the monthly trend reference. So, do we have a trend on the monthly chart is the answer on which I'm going to have to answer. It is not going to give a rational answer to that question. Is it going to be probabilities? So what are the probabilities to have a monthly trend? Well, let's have a look at it, okay? ETH on the monthly reference chart time frame, I do not have enough history. My indicators start to plot some kind of things. Okay, sorry, let me just go real time. They do start to plot some things, okay? I start to see my context building themselves. Sine wave is starting to synchronize, but I certainly lack of history for these indicators to sync up with the prices. They lack of historical candles. So I would say I have hints that it actually could be the case, but it's far not enough so far. I have the range that has been broken. We can see that value has been assessed very quickly, but still assessed on these areas. We have, and we might have, broken through these areas, and we have at least ported the one-to-one ratio. So if this is a breakout, we already have validated and confirmed it. First point of view. But that's certainly not enough to assess, reasonably speaking, the probabilities to be significant enough to see this as a trend. There are lots of breakouts that end up just being bullshit, and they are going to be reversed and create bigger time frame ranges. So to make sure that we are in a trend and not in a monthly range, we're going to have to dig below the surface. So big disclaimer in here, before going any further, I'm going to use expert patterns from a strategy, which means this is something that even those I'm trying to teach my strategy to don't know anything about, because this thing is what I teach them at the latest stage of maturity. I'm going to use multi-time frame patterns. And of course, these are complicated stuff with lots of things to validate first before intending to use them. So what I'm going to do today is certainly not a review of these patterns, but just a kind overview, quick overview, so you guys at least understand the basics of what my technical analysis for ETH is over 10-year schedules. Okay, so what we have there is multi-time frame trends, because I need to find the largest possible time frame in which there is a trend, and it is weekly chart. Looking through my strategies, rules, I need to see a preceding range with a moving average inside the context, which is what we have in here, support resistant context, okay? We need to see cycles and prices rejecting these contexts. So we do have that. The mature range, very long, has a crashing structure pattern, but still we took some time to value the assets, bring it a rational value. And then of course comes the change in which we break out of this area, consider it area A, and we are going into a higher area B. That is for sure, because the weekly chart has a trend. The question is, do we have the same motive into the monthly chart? And if such a thing is actually occurring, then we would still be there today, or somewhere, which means we would have far more months to plot as a bullish trend. This is the question we try to answer. And we're going to use lower time frames reference to dig into some informations that will let us orientate the probabilities favorably or defavorably, and we're going to answer that questions today. Okay, so what are the patterns that I use in multi-time frame trends reference? And you have to validate that first. I'm going to use two patterns in here to answer that question, because these are things that I use to gather information on smaller time frames to bring it up on informations and probabilities of the higher time frame trends to exist and to pull itself and to pull its game through time. So here's what we use today. The first one is the one I like to call the pullback to trend follow interaction, which means that when they are multi-time frame trends layered one into another, normally they should be some clusters, okay, in which normally when we have a pullback on a lower time frame degree trend, it generally corresponds to a trend follow opportunity on the higher ones. That's the first pattern we use. There's a second pattern that we'll highlight just right after, but let's give it a start with this one. So we need to make sure that we have multi-time frame trends first, okay? So weekly chart is our reference time frame from now, and we're questioning the reality of a monthly chart trend. Okay, so let's play that game. The weekly trend is there. It's already played its game. We already have trend follows and stuff like that. So there is a weekly trend, no questions about that. So we're going to use the same patterns that occurred on shorter time frame to try giving rational answers and probabilities of the monthly trend. So here's the breakout. Okay, this is where the bears disappear, normal bear cycle, the preceding range, the moving average, pricing, whatever. Okay, then comes the one-to-one ratio. We report and we double down the range at least. So this is where we validate and confirm. So this is where we have to see signs of trend follow to validate the trend's emergence. This is what we have. This is where our first trend follow opportunity shows up. There are multiple trend follow patterns, but this one has been triggered with the moving average. I'll eventually explain that further down the road. So first trend follow has been in here for the weekly chart. Okay, the second one is still pending, as we still need to get out of the first trend follow price area. We're still dealing with the same prices, so the pattern will play itself only if we get out of this area. Okay, so the trend's maturity on the weekly chart time frame is that we validated and confirmed the trend and we've made the first trend follow. There could be a second one, there generally is one, and then will come the divergence phase, which means the momentum will slow down and prices will stop making severely much higher prices. It will start slowing down, then comes the pullback, and final excess, which is the market will make a new all-time high afterwards, but this one will not accelerate again. It will start failing as we try to accelerate actually. So this is the trend motive I'm following. So the weekly chart is still far from being over. We still have a pullback to make because the pullback has to follow some sets of rules. The pullbacks has to close the context boxes below 50% context. So that means we need to close the next box. This one would be 31st of December. We would have to close it at least below 32.55. Okay? Has to be at least 23% retracement. So that will be the case in here. And we also need to terminate a bear cycle, which is not the case. Right now, the bears are totally non-existent in this market. So there is a missing piece for these pullback to play their game. We would need to stop rising in ETH for a little while until we at least terminate the bear cycle. So this case, we would have a weekly pullback. And the weekly pullback is not the end of the trend. We still have higher high points to make the final excess. Okay? So anyhow and anyway, do we still have room to the upside for ETH? Yes. But it's in a time frame horizon of 2023-24. So this is not the question we're trying to answer there. Still, what we would use back in time to make sure that the weekly trend would play its game is exactly what we're going to try figuring out for the monthly chart. So let's do it. Is the daily chart time frame pullback that we're going to try figuring out. Okay, just look at it. Where did we see range? Here. So the breakout phase would be there or there, whoever. We don't really matter a lot. What we care is when did the price validated and confirmed. So that would be there or there anyway. And when did we manage to close below 50% context while still terminating a bear cycle? Okay, no way. We did not. Yes, here. Closed below 50% context. In here, sorry, this is where we closed below 50% context and terminated a bear cycle. Let me just zoom out a bit so you'll see this. So this is where the daily pullback is. Okay, fine. So let's see if it was triggering a trend follow pattern on the weekly chart. Well, there are multiple patterns. There are actually 3 of them. Okay, but this one is one. Okay. We have one pattern that is buying the moving average, okay? So the 20-period moving average is there. Sorry, what the hell am I saying? Daily chart pullback, yeah, 20-period moving average on the weekly chart. So in here, we do have a confluence in which the daily chart's pullback is the weekly trend follow opportunity, okay? So in that perspective, that is one pattern that I know, and that is a first cluster that tells me that the weekly chart is trending. But I had that answer and huge confidence with this using this pattern. So just to show you how great that is when you have multi-time frame trends, I'm going to do the same job with a 4-hour reference. So one step below in terms of the multi-time frame layer stuff. So I need to find the moments in which we broke off this trend. This is where it is, range, breakout. Where did we manage to close below 50% context? Not there because we close in here. Okay, there, closing below, okay, and terminated in bear cycle. So this is where the 4-hour pullback is. Minimum 23%, all of this stuff is checked in here. Good point. So, was that 4-hour pullback a daily trend follow? Okay, so the first daily trend follow was there, 20-period moving averages pullback. And then here's the second pattern for a pullback. We reverse the context, we build a third range boundary, and we break it. So did the 4-hour pullback bring a daily trend follow? Yes. So same pattern been at play in here. Okay, so you start to see the recurring stuff of it. When the pullback of one lower time frame is corresponding with a trend follow opportunity on the higher one, that is the sign that the higher time frame trend is very likely going to pull itself through. Okay, this is pattern number 1. So let's try to give it that answer to the monthly charts questions we were wondering. If we want to have statistical probability of the monthly trend to play its game, even without the lack of historical charts as prices we've got there, we need to see the weekly pullback, which we still do not have. If it occurs, it has to be triggering a trend following opportunity on the monthly chart. So either being on the 20-period moving average, okay, or reversing the trend channel, building a third range boundary, and breaking out of it afterwards, okay? So this is one of the things that we could see. If these things happen, that would be the first confidence sign to me that we do have a monthly trend, which means I would study the way prices pull back themselves on the weekly chart if the pullback occurs. Okay, first part of the answer. Second part of the answer is another pattern that I use. This one has 2 time frame steps in between the assessments. So let's get to the 4-hour chart in here as an example. Okay, in here, the behavior of the 4-hour chart's trend will let me have a lot of confidence on the existence of the weekly time frame charts depending on the way it is behaving at the final access stage. Let me just explain that one. It's a bit complex, but I mean, it's not that complex either. So this is where we broke, this is where we had the pullback, so the final access is afterwards, when we break the new all-time highs after the pullback. So this is where the final access is. A final access pattern has targets above the higher time frame context, which is this, and above the resistant context, and we generally have trend breakouts, or cycle breakouts. So this is the area, and this is perfectly the area in which the prices should have stopped. Normally, on a trend, if this was the reference time frame trend, which is not because we're in a multi-time frame trend, this is where things should have stopped. And they did not. Because what I like then is when we get to the technical area of the reverse patterns to play, I look at what the market does. Is it doing a retracement to the support context, which introduces neutrality? The market is going to build another range. Okay. We go back to normal, the trend is terminated, and we've reached out area B's targets, basically. Or option number 2, we have multi-time frame trends, and the fact that this is a lower degree time frame trend is going to be influenced by the high time frame ones. So if your reference time frame plots a market excess when it's supposed to terminate its trend, this is a clear evidence of statistical relevance to have a trend 2 time frames above. So basically, the fact that the 4-hour time frame trend didn't terminate itself at that point where it should have ranged, it instead gone stupid parabolic shit that was earlier this year. Okay, you remember ETH was the new game changer, whatever. So this is what people thought and talked about. This is what I saw. Market going excessive at the end of 4-hour time frame charts, just confirming one thing: we'll get the fucking weekly chart trend. Therefore, buying the pullback, eyes closed. Okay? So this pattern, let's try to extrapolate it on the higher time frame. And why I care a fucking lot about what ETH is going to do next year or early next year. Because here we are. The daily pullback is there. This is our weekly trend follow, by the way. So what I care about next is, are we going to get a final excess that would play itself normally, which will tell me that the monthly trend doesn't exist? Or are we going to get a final excess that goes out of control, which will just tell me one thing? Not that people are publish ETH, whatever. It's just that will tell me one thing, that the monthly trend is likely existing already. Okay? So what matters to me is that where is the final excess area? Final excess, as we said, is above the higher time frames context and must be above the resistant context as well. So this is where the speculative area is. Okay? Call it above 5,200, right up to 6,000 approximately. If prices were to reject out there, and they will likely do, pull out some end of patterns, end of context patterns, reversal patterns. What matters to me is how the market will react out there. Is it going to retrace to the support context? In that perspective, we're going to range into this time frame, which will tell us that the monthly trend does not exist, but there is still the weekly trend to terminate. Okay, so that would certainly be not be the end of the world. But if the market retraces down to the support context, I'll have the information I want to answer the questions we were asking ourselves. But if it did not, what if it accumulates again or just break through, just like it did for the 4-hour chart? What is it going to mean to me? I'm not going to say the bullshit of, well, ETH flipping was predictable, bro. I don't pay attention to this. What I pay attention is if I see the market going excessive again on the daily reference time frame and overcoming the supposedly resistance area, that would tell me one thing, that we have a monthly trend with a statistical relevance, which will tell me yet another thing, that I'll be the first one to buy the weekly pullback, because it very likely will be the first trend follow on my monthly chart time frame, and it very likely will correspond with the 20-period moving average on the monthly chart. So these are patterns I know. These are patterns I use in every multi-time frame asset there is. If you want to extrapolate a trend over a decade long, this can only be due to monthly trends backing them. If there is a monthly trend, well, I don't have enough information on the monthly charts to pull it forward with reasonable confidence. So I have to make assessments and probabilities to orientate this probability one way or the other. Is it very likely or is it less likely that we have a monthly trend? To answer that question, I need to gather information on the shorter time frames. What I showed you today is how I do this by using multi-time frame referencing, kind of gathering infos on shorter time frames and shorter time frames behaviors depending on their own trend's maturity to let me know about the probabilities of a trend existing and putting itself on the higher time frames. These are exactly the same pattern, I'm just shifting the time frames. And this is how I give answer and probable answers to the questions. There are two things I care about, though. If you understand me well, let me sum up the conclusions. If we turn out to terminate a bear cycle on the monthly chart, on the weekly chart, then I pay attention to one thing. Is it going to trigger the trend follow? I'm not going to be very aggressively buying it, but I'm going to try it out. If it succeeds, which means new all-time highs afterwards, that would be the sign that we have the first cluster, that the pullback is corresponding to the first trend follow, but has to rebalance on the moving average, okay? Second option is we certainly do not terminate a bear cycle on ETH, and ETH goes a bit out of control and breaks over the 6K area at some point, or gets a bit excessive without retracing to the daily trend channel. If that occurs, that tell me, just like it was for the 4-hour charts that gave me confidence over the weekly trend to pull itself, which it did already. I'm going to use that same pattern to extrapolate the existence of the weekly trend, or of the monthly trend. I hope you guys understand what I just explained. It is a bit complicated, and like I've always said, clearly in the beginning of that thing, I'm not explaining everything. I'm just explaining what the schemes are and how I gather information on the shorter time frame to use this as a reference on higher ones. Don't do that alone, okay? This is a bit more complicated than that, and there are several mistakes that can be made on referencing these time frames and assessing trends expositions. So don't be dumb enough to blindly copy me, but understand, once again, what matters. This is my strategy. Others have different strategies. But I have talked with my fellow traders, the ones I know are real professionals. Turns out we all have the same conclusions. We're all looking at two things. If there is an ETH pullback, where is it going to be? And if it is the 20-period monthly moving average that rebounces on, that's going to be a first sign that we do have monthly trends. But on top of that, if we have a market excess, that will be even better for us to buy the next pullback, the pullback that will come right after this final excess. If we get a daily excessive market breaking above 6,000, that's the sign of the monthly trend, just showing itself in front of us. And that's what's going to give me rational statistical answer to my question. So if there's a pullback, where is it going to be? If we go higher, how far above the reference levels are we going to be? And that will give me a rational answer to my questions. So is there a monthly trend on ETH? Possibly, yes, but we do not have answers for that yet. Are we going to get these answers sooner rather than later? Yes, possibly early next year. So to be honest, all I have is not the answer you were probably seeking for when you started that video, but I can give you something. Statistical occurrence and speculative areas in which you will, rationally speaking, answer that question. And it's not related to ETH 2.0 deflationary bullshit, or even less than that, the ETH maximalists' beliefs. This is pure statistical answer of multi-time frame trend information gathering that I do on every multi-time frame asset. Not just ETH, I just do it on every stock that I have in the portfolio or whatever. If there is multi-time frame trend, this is how I gather information to process probabilities on multi-time frame references. That being said, there's going to be more than enough, guys, for today. I wish you a pleasant day, pleasant holiday season at the end of that year. We'll, of course, schedule in a yearly review kind of video that we do each and every year, in which, of course, I will explain once again about these ETH plans over the long run, which I certainly do trade myself. So I'm not just talking, I have some skin into this game, and I'm definitely way too much interested into ETH. But I can tell you something, there's a third pattern of multi-time frame trend referencing that I use to probabilistically orientate the existence of a trend on higher time frames. The third pattern is more complicated, but is already at play as well. So I definitely believe we have monthly trends, but I'm going to need confirmations from the two other patterns that I showed in front of you today. That being said, bye guys.